We are approaching the best time of year historically to be invested in the stock market and the financial markets. I'll explain what that means in just a moment. Hey friends, Adam Hammer here, Chief Investment Officer at Hammer Financial Group in beautiful Lockport, New York, and Myrtle Beach, South Carolina. I'm joined in practice by the reputable Paul R. Hammer. Thank you so much for being here. All right, so what do I mean by that we're approaching the best time of year to be invested historically? Well, up on your screen, we've got a couple of bar charts to look at. And you can see on the bottom, we've got the quarter one, first half, quarter two, second half, quarter two, first half, so forth and so on. Well, we're breaking the year into calendar quarters. Of course, a quarter is 3 months, right? The first quarter of the year is January, February, March. Second quarter is April, May, and June. Third quarter is July, August, September. And the fourth quarter is October, November, December. Well, if you look at this chart here, the blue is the S&P 500, which is 500 of the largest publicly traded companies in the US. And then we have the NASDAQ, which includes a lot of the same companies in the S&P, but has a lot of technology companies as well. And this is in the red. Well, if we go to the right side of your screen, you can see that in the first part of the fourth quarter, the S&P 500 averages about 15%. The NASDAQ averages about 17%. That's just in the first part of the quarter. Then we get into the second part of the fourth quarter, and we are averaging about 18% right there. These are really solid, historically solid returns. Now, of course, does that guarantee that this year we're going to get the same type of returns? Well, no, of course not. There's no such thing as a guarantee. But if history is a guide, which often it is and can be, and we look back at years and years of stock market data, this type of information can make us feel pretty good, or at least optimistic about how the end of this year might turn up. And as many of you know, 2022, last year was really ugly. This year we've had a much stronger year. We've been making up some of those losses. And if history is a guide, that means that the end of this year, we could end very strongly and maybe get to the point where we fully make up all of those losses that happened in 2022. So you probably haven't heard this information in the media or TV before. Hopefully you found that valuable and interesting. If you like this kind of information, if you come to our website, paulhammerfinancial.com, you go to resources and go to our insights, you can take a look at our video library here as it loads up. There's a whole bunch of different videos that you can watch that I've done in the past about bank failures and the economy and the recession and so forth and so on. And if you want to get a hold of Paul and I, the easiest way to do that is to check this Contact Us button in the upper right. You just click that button, super easy, and fill out some information, and Paul and I will respond to you very, very quickly. So thank you again for watching. Hope you found this valuable, and I will see you on another video. Take care, everyone. Bye-bye.